Hi everyone, this is FS Go speaking, one of your Forex mentors, and today guys I'll be showing you NASDAQ price action. So without any further waste of time guys, let's get started. So firstly, I'm going to start with NASDAQ price action. So what is NASDAQ price action? NASDAQ price action is also known as technical analysis, meaning you can think of technical analysis as composed of volatility movement, meaning it is controlled by buyers and sellers. Every time you see buying and selling, when the market goes up and down, that is what we call a volatility movement, which leads to technical analysis. So firstly, what we understand in forex trading is that there's a lot of information out there, however, it's unstructured. So we saw that we found a way to teach you in a manner that it's easier to understand. So what is chapter 1? Chapter 1 of price action is market trends. What is market trend? A market trend is a perceived tendency of financial markets to move in a particular direction over a period of time. So we have 3 types of market trends, meaning market trends consist of uptrend, downtrend, and lastly consolidation trends. However, we are only going to focus on an uptrend and a downtrend in this case. So firstly, before I continue, let me show you what is a consolidation trend. So a consolidation trend is when we have a trend that has no overall direction. So meaning it's not an overall buy or an overall sell. You just buy low, sell high. This is a consolidation trend. Okay. So now let's continue. Now that we have identified a consolidation trend, let's go into identifying how to identify trends. So now I'm going to show you how to identify trends. Firstly, we're going to start with an uptrend. So what is an uptrend? In an uptrend, we're going to focus on highs, meaning we have a higher high and a higher low. You can think of an uptrend as a buy trend. Let me show you an illustration of what I mean by this. So firstly, let's say the market moves in this manner, up and down, and then we're seeing that this is our trend. So up here will be our higher highs. At the top here will be a higher high. Why? Because this is the high part of the channel and each high is higher than the previous one, hence higher high. And down here we have higher low, meaning this is the low part of the channel, but each high is still higher than the previous one, hence higher low. So this is how to identify an uptrend. Okay, so now let's continue. A downtrend now. In a downtrend, we're going to focus on lows, meaning that we have lower lows and lower highs. So you can think of a downtrend as a sell trend. Let me show you an illustration of a downtrend. A downtrend is similar to an uptrend, however opposite, meaning its overall direction is going down, just like this. And then we have lower highs at the top, and then we have lower lows at the bottom, meaning this is the high part of the channel, but each low is lower than the previous one. And this is the low part of the channel, and each low is lower than the previous one, hence lower low, and here lower high. Okay, so that is just how to identify a trend. So now let's continue with the slides. So now that I just showed you how to identify an uptrend and a downtrend, I'm basically going to teach you some forex jargons or forex terminologies to make you understand better how to spot your uptrend and a buy trend and how to make sense of it. So firstly, I'm going to start by teaching you guys an impulse move. So what is an impulse move? In forex trading, we have this word called impulse move. Impulse move is an overall direction of a trend, meaning in order for you to apply an impulse move, you have to know what is the overall direction of a trend first. And then when we use an impulse move, it's more of a swing trading. And when you trade using impulse move, is when you know that you can hold that trade for more than 2 days, up until weeks. However, it has a limit. So secondly, we have correction, pullback, retracement, and a retest. All of this mean one thing. It's either you can choose to call it a correction, a pullback, a retracement, or a retest. However, I'm going to choose to use a correction. So all these things mean the same thing, and you apply this as a scalping trading, meaning it's not a long-term trade. A correction or pullback, you can think of it as a short-term trade or a reversal in a trend. This is the overall direction of a trend. This is a short-term reversal of a trend. Okay, so now let me show you an impulse move and a correction in a buy trend. So let's say firstly we have a buy trend. We have a buy trend here. Remember, at the top we have higher highs at the top, and the bottom here we have higher lows. That's why it's a buy trend. So firstly, I said, what is an impulse move? An impulse move is an overall direction of a trend. We have an uptrend, right? So in an uptrend, what is the overall direction? The overall direction would be a buy. So meaning our impulse move is equals to a buy. This is our impulse move. Why is it impulse move? If I enter a buy here and hold this buy, I can still be in profits, even if I hold it for more than a week or days. Hence, it's an impulse move. It's an overall direction of a trend. Now, what is a correction? Would be a sell. Meaning, if I enter a sell in a buy trend, I must know when to enter and when to exit. Why? Because if I enter here and I don't exit here, I will be in losses. Just like that. That is why it's important for you to identify whether I'm holding a sell in a buy trend or a sell in a downtrend, because an impulse move and a correction determines on when to hold a sell and for how long. We have swing trading and scalp trading. Okay, so now let's continue with the slides. After understanding that we have entries of knowing when to buy and when to enter, I'm going to show you how exactly to understand when do I buy and when do I exit. There is no strategy in the world that can be formed without understanding what is a support and what is a resistance. So firstly, support and resistance are turning points in the market. So support represents a buy, meaning you can think of a support as a floor. So let me show you an example of what I mean. So let's say we're at the floor right now. We should always be above this floor and never below. Hence is a support. It always supports the market to going up. So secondly, we have a resistance. You can think of a resistance as ceiling. It represents a sell, meaning we should always be below, never above. The market is always resisted from going above this point. Hence, it's a resistance. And a support is always supported to going up. At a resistance, it resisted from going above. We have a vertical support and resistance, and we have a horizontal support and resistances. Okay? So now let me show you an illustration of what I mean by that. Right? This is our normal volatility movement of buying and selling. Right? But now we see that we have support and resistances, and we want to know how to apply them. First of all, in order to know how to approach them, you have to know that we have turning points in the market. We have to first identify our turning points in the market. So turning point number 1, turning point number 2, turning point number 3. So this would be our turning points. And after identifying the turning points, just make a line to join all of them. Just make a line to join your turning points. So now after we've seen our turning points, they can be perfect. But yeah, after identifying our turning points, we see that we have higher highs at the top and higher lows at the bottom. So now we have identified what? We have identified an uptrend. Many people know this line here as a trend line. They are not wrong. This is known as a trend line. However, it has another name. This trend line has another name as well. You can think of this trend line as it's an uptrending resistance here. The market is always resisting this point to being crossed over. Hence, this becomes our resistance. It's our uptrending resistance. And at the bottom here, we have an uptrending support. The market is always supported to go up, never below. Hence, this is our support and this is our resistance. And then also, I did say we have vertical and horizontal. So I'm going to show you horizontal ones in this very same chart. After identifying our support and resistances, I'm going to join the horizontal ones here like this. So let me make a clean chart for you to understand better. So as I clean like this, let's say we have our buy trend. Now, let me show you the horizontal support and resistances. We just make a line horizontally so on our turning points. And as you can see right here, this here would be our resistance. This here would be a support, this here would be a resistance, this here would be a support, so on and so forth. So, one thing you should understand about support and resistance is that if this is a resistance here, and this is a support here, and the market is currently here, this can always be a resistance unless it crosses over. That's when this becomes our support. Okay? So now, the reason I'm showing you this now is because I want to show you probabilities. In forex trading, we have different types of probabilities. We have a low probability and high probability. So let's say we know that at a support we buy, but the market is currently here and we miss this opportunity to buy right here. When we come, the market is currently around this area and you want to enter this buy here. Entering this buy here will fall under low probability. Why? Because the market can first turn at this resistance, go back down before going back up. And it's only one confirmation saying that this is a buy. Now let's say this market moves up until this resistance right here. First of all, we have two confirmations to show that it's a resistance. We have a vertical resistance and a horizontal resistance. Meaning at this point right here, we have more than one confirmation to say that we have a sell. Hence it becomes a high probability. That is how you identify your low probability and your high probability. Knowing how to use your support and resistance is very crucial for you to understand in Forex. So now let's continue. When the Forex market moves up, and then pulls back, the highest point reached before it pulled back is now resistance, meaning right here would be our resistance. The market moved back and turned. This is our turning point. Hence is now our resistance. Now let's continue. As the market continues up again, the lowest point reached before it went back up, it is now our support. And right here would be our support, meaning the highest point would be our resistance and the lowest point would be our support. So in this way, resistance and support are continuously formed as the market oscillates over time, meaning as the market oscillates like this, we identify the highest point as resistances and the lowest point as support. Now that you know we have swing trading and scalp trading, I want to show you when to know how to enter a swing trading and when to close a swing trading, as much as you know when to enter a scalp trading and when to close a scalp trading. Okay, so now let's continue with the slides. So in order for you to understand how to know when to have an entry and an exit point, you must understand trends in trends. You must apply reverse pyramid. What is a reverse pyramid? A reverse pyramid is when the high part is bigger and as you go down it becomes smaller. So when we analyze, we start from weekly time frames and slowly go to daily, to 4 hour, to 1 hour, to 30 minutes. Meaning we start from big, we go to small. That is trends in trends. So now let me show you what I mean by trends in trends. So firstly, let's say we have a weekly analysis. So this is our weekly analysis. And what do we see? We see that we have a sell. We have a sell trend in our weekly analysis. And then the market moves in this manner. Let's say the market moves like this, right? And here we have a what? We have a buy trend. And the market continues like that. Continues moving like this. So now we have what? We have a downtrend. And then again, it continues going up and down, up and down, up and down. So as you can see right here, we have what we call trends in trends. So this would be daily analysis. So for those people who only analyze using daily, this is the dangers that they're gonna see. So I remember in the beginning I said this, if I enter a buy in a buy trend, I will be in profits, right? And if I enter a sell, I must know when to enter and when to exit. But I did say also a swing has a limit, meaning if I enter my buy here, I must close my buy up here. Everything has a limit, because if I don't close right here and I go away for weeks, I'll come back, my account will be blown. You must know when to enter your buys and when to close your buys. Why? Because we have a buy trend in an overall sell trend, hence trends in trends. This is the last chapter of how to understanding your swing trading limits and your scalping trading limits. So basically guys, right now I just showed you how to trade using what? Price action trading or technical analysis of NASDAQ. And that will be all for me guys. FS Go speaking, signing out.